Hey everyone, it's your favorite host, Marcus Norman of Gentleman Style Podcast Show. And today we are interviewing my favorite topic of all time, passive income. Because there's different talks about what's passive, what's not passive, stocks, bonds, mutual funds. You know, we bring in that custom to the stage here today. And I could have I found this gentleman, and I'm so excited I was able to find him, and he is honoring us today by honoring and promising to be a guest on the show today. And we're going to talk about litigation investment and what is up in that space and what we got going on and what we need to tune into. This man is a conglomerate and a combination of years of experience in the investing arena. He's also in the tech space. He originates from the tech space, so you won't want to miss 1 second of what this brilliant mind is putting down. Stay with us. Here we go. Thank you for tuning in to Gentleman Style Podcast Show. And I'm excited to bring Mr. Patrick Grimes. This man is huge, changing the world, changing the way investors think about the market and how they can view and put their money in a really strong asset class. And we're going to talk about litigation investment, his book and what he got going on, and some of his background and everything in between. So help me welcome to the stage. Without further ado, I can't help but keep this man back, Mr. Patrick Grimes. Welcome to the show, sir. Thank you for being here and blessing the stage, Gentleman Style Podcast Show. How are you?
I'm great, Marcus. That was an awesome introduction.
You're an awesome man. I can't do nothing else but bring out the fireworks for you, sir. But thank you, truly. I mean that, for being here today and sharing your expertise, your knowledge, your wisdom. You started off in the tech space, and now you're transitioned out into passive investing and helping others and giving back and teaching what you do, which is unheard of. Most people don't spill a tea. But how did you transition? Why did you transition from tech space? Because you weren't just tech. You were like Elon Musk tech, like NASA and cyber cars and AI. So that's a big space to just walk away from. Tell us, why did you do that? How did that happen?
Well, since I was a little kid, I was pretty much a nerd, and I just stuck true to that into adulthood. So I play with Legos and electronics. Do a lot of outdoorsy stuff too, backpacking, kite surfing. But I got some advice early on about getting into high tech, and I went in, head first, machine design, automation, and robotics. And when you're in machine design, you end up creating things that haven't existed before. And a lot of the times that's with companies that have a new gizmo or gadget. So yeah, I was working with Tesla. I did a robotic assembly for the rotating part of their motor, the rotor. Did some work for NASA, did some work for Lockheed, Raytheon, a lot of medical devices. Actually did a little bit during COVID. I got in there and helped out some COVID automated assembly test kits. Really fascinating space, kept me very intellectually stimulated. But probably like most of your listeners that are hardworking professionals, doesn't leave a lot of extra time. And oftentimes stashing away money in the 401k, IRA, or trying to day trade doesn't really get you there. And so I started diversifying pretty quickly and had a bumpy ride at first, but that's how the step away from corporate America was a long journey, but that was how it began.
And so I want to stick right here for a minute, because this is good, right? We don't hear, I feel like we don't hear this enough. People think you're an overnight success. So I want to debunk that myth right here, right now. So can you share a bumpy experience? Because, for the entrepreneur, you hear the stories, right? They left it all. I quit my job. I walked out. What was a bumpy thing that made you say, I need to do something else?
Probably can do the next dozen shows for you on each of the bumpy. Couple just absolutely devastating things here. One, when the first engineering job the first real machine design job I had, I went to the owner and I said, hey, look, I'm got some income now and looking where to invest. And he told me to invest in real estate. He said his only regret was not investing more sooner into real estate. And that was shocking to me because I was expecting him to list out all the startup companies that he knew of that I could, jump in on stocks and the new technologies coming out because we were in the middle of the thick of it. And he said that while he made his money in high tech, what provided for his family and his future wealth was actually all in real estate. So I jumped into real estate heads first, put everything I got into what turned out to be a highly risky investment, pre-development, residential,
Ooh.
because I looked at it and said, look, I can double and triple my money every couple years. Let's do this. And look, these guys have done this for a couple years now, and they've had a good track record in the last few years back. Let me jump on this train. Unfortunately, this was back in 2006 and 7, and in 2009, everything flipped upside down, and I was personally guaranteed on a loan that was many times my net worth. Went through foreclosure. I was devastated, lost everything. I was still gainfully employed, but embarrassed and broke. And so I came crawling out of that. Took me a long time. Even when they foreclosed, the government came back and taxed me on the forgiven debt. So I would income tax on the bank's loss in my property. So it was brutal.
That is harsh, and that's not easy. And for the audience tuning in, redevelopment real estate is any new construction on a site that has pre-existing uses. It represents a process of land development uses to redevise the physical, economic, and social fabric of urban space. And so that's what he dove into. Is that right? Am I? I don't want to put words in your mouth. Is that right? Or way off?
Yeah, it's a pre-development. It's before you're putting sticks in the ground, right? You're getting the pads set up, you're getting utilities, you're getting roads in there. It's probably a little more simple explanation.
For sure. I appreciate that. Thank you for simplifying that for us here on Gentleman Style Podcast Show. Sir, what is you have that knowledge, you have that expertise in the technology space. What technology today do you feel is it that's changing the market? That's going to be changing the market, whether it be for good or bad. AI. I saw. You're starting to see more and more push for 3D printing, right? The 3D printing of homes because we're in a crisis right now where we don't have enough real estate, enough housing. So people are looking at options, especially overseas, about 3D printing houses out of, you can build a house in 3 days, right, from the ground up. So, what technology do you see that's sticking out that you think will be very controversial? And this is not investment advice, y'all. This is to protect my guests, but personal opinion, personal perspective.
Well, again, this could be another dozen shows because there's a lot out there, but you can't have a conversation about disruptive technologies and not make it about AI right now because while there's other things very cool going on out there, AI is most certainly going to impact all of us very, very quickly in ways we can't fathom. Uh, the other like the Tesla bot and the human droids also. Before my lifetime is up, I'm looking forward to not having to do my own laundry, put dishes away, or cook and clean. I mean, that is going to be a reality in my lifetime, and that's amazing, right? So, but AI, we use it in dozens of ways in our business. It's hard for me to go a full day without just revolving around the different AI applications. There's various features of it that are integrated now into even the pricing of our rental properties, data mining and analysis, writing of legal contracts, of course, reviewed by attorneys, even doing finance type work, again, reviewed by senior finance officials. But things that would usually take teams of people many weeks can literally be done instantaneously with AI and then reviewed by a single individual. So I did a whole webinar on this. So Passive Investing Mastery is our website, and I did an entire webinar on practical AI uses for business owners that you can start using today, just to try and bring it home to people on how prevalent and useful it can be for you right now.
That's huge. So I wanna pivot now. I want to talk about something unique because again, that your mentor, or I won't say mentor, but this gentleman that you respected because his opinion meant something to you, you valued it, and you took action on it. But now you've gone into real estate, done real estate. but you're doing something else that's also unique, which is litigation investments. Can you talk about what litigation investments is and what that snapshot of a picture looks like for my audience, please?
Sure. Yeah. And so let me frame it up a little bit that,
Yeah.
when I started in the journey of investing in real estate, it wasn't the end game. It wasn't this was it for me. This was where to allocate and diversify. The message that I was given was the roller coaster of high tech and the stock market, it will fail you. The mistake I made was to go all in real estate because it is really an allocation, a piece of your portfolio. Depending upon what metrics you look at, the wealthy might put 25 to 50% of their assets in what are called the alternative space. Alternative spaces are outside of the stock market. The common known ones are real estate. That's an alternative investment. Oil and gas is another one. Gold is another one. It's kind of like the popular ones. Not a lot of people can stomach oil and gas, and gold is really a way to get to put some liquid capital in, but it doesn't really produce a substantial cash flow return. But it's a hedge against things like inflation and the devaluation of the dollar. So people are like, well, what happens when I over allocate into real estate? Because over allocating in any investment, just like the stock market or just like real estate, can get you into trouble. And that's what happened to me. And it's not often that the stock market and real estate are down at the same time. It wasn't the case in 2009 and 10 when I lost everything. But right now, real estate, commercial, and residential across the country is in the middle of a crash. We just got done with the Fed rate hike. 11 out of the last 14 Fed rate hikes ended in a bust, in a recession. So how do we protect ourselves against that? We allocate into different investments which are non-correlated. And then you have to venture in some of the less commonly known ones in industries that are recession resilient. Education, healthcare, litigation, or legal services, those are examples. And that's when you start to see these kind of niche, novel investment products come up, like litigation funding, which we're involved in, and how it fits among a very well allocated and diversified portfolio. So all of your investments don't end up being down all at the same time.
So what you're saying is if I'm in real estate, right? And I have an apartment complex over here, I got a single family house over here, I got a mobile home park over here, one or two parks. I'm not diversified enough. I'm still
Correct. Yeah, because the point of diversification, if you think about it, it's to have market resilience, right? And so market resilience means that if all of the factors, all of the market economic drivers for one asset class are similar, like interest rates affects everything you just said. Well, how does interest rates affect healthcare? How does interest rates affect the legal services? How does interest rates affect education? They don't, right? So if you have to be truly safe, to be truly allocated into a recession resilient portfolio, you must diversify into assets that are non-correlated, that don't rely on the same market fundamentals and rise and fall together. 26% is actually what Tiger 21 is a large high net worth investment group. That's actually where they are at in their maximum real estate allocation.
And so to piggyback to go back, litigation investments is just another niche inside of a very diversified portfolio of alternative investments. Because real estate is one pocket, even though there's multiple layers to it, that's not fully diversified. You have to get into those markets, those investment products that very few people are diving into and no one's really heard of. Am I summarizing what you said? I want to make sure I understand completely. I'm doing this for me. This is for me to help me.
Well, if you want to start growing in your sophistication in your portfolio, then you would look towards what the large institutions, hedge funds, and sovereign funds are doing. These are funds that know that you can make a return, but it's more about, can you sustain your wealth, right? The key is to not lose wealth. So you want to not pay taxes, and you want to be able to make and keep what you make, right?
Absolutely.
So in order to do that, these larger institutions work on diversified strategies into non-correlated investments. And so they seek these investments into these industries which have resilience. Litigation services is in fact, we show a graph on our website where you can see gold, you can see oil and gas bouncing around, you can see even real estate and its instability. You can see all the S&P 500 bounce around, and litigation service is just a steady growth, steady rising. And why? Because even in recessions, people need representation through the legal system. In fact, in recessions, sometimes people are more litigious. And same thing with healthcare. You're going to see the similar kind of traits. So in legal services, it's a way to invest and to allocate into something to where when you sleep at night, you know what? I've got an investment somewhere that even if my stock portfolio and my real estate crashes, I'll have something coming back that'll have absolutely nothing to do with that. That won't be driven, the returns won't be driven by any of the rest of the cycles of my portfolio. And that's how you achieve that true resilience.
So what's pushing?
I've lost it all one time, so this is why I speak so clearly and with determination on this topic.
No, that's necessary, and thank you for doing that. And speak slowly for me, but so let me get this straight. Major law firms need capital to go through the litigation process, so they reach out to investors to help them fund these trials, these court, because certain cases, especially if it's like a lawsuit, business to business, that can go on for months or years. So the capital is being utilized for what with these litigation firms?
Yeah. So once you identify an industry or a market which is something you want to allocate to, like in real estate, there's a lot of ways you can invest in real estate. You were listing some of them, right? Equity, debt, asset classes, sponsors, regions, geographic. But in the legal services, it's a very simple business. Actually, it just comes down to hourly rates and court fees, right? Or an attorney may have to market to get more clients. And so when you want to access that industry, you got to fulfill a need. So solving a need in the legal services space, well, it just so happens to be that not everybody can pay for attorneys. Those that are harmed by an injustice oftentimes don't have the funds necessary to get that justice. It's very expensive to settle disputes through the court system. That process of settling disputes through the court system is called litigation. And when a harmed individual wants to go after a large corporation out there, a defendant, because of corporate misconduct, they need to find an attorney willing to either go pro bono, never get paid, or work on a contingency basis. This means they're going to defer their fee and they're going to take a percentage of the settlement. So a contingency upon winning and settling and taking their proceeds. Now, attorneys don't have a bag of cash sitting around. In fact, they've got to pay $300, $500, $700 an hour for some of these litigation attorneys to go after these large institutions. So we would never have corporate accountability in America if it wasn't for those investors that will help prop up the harmed. Those individuals, like at Camp Lejeune, where our military drank contaminated water for 17 years after the government knew that it was contaminated. And now the heroes of our society are now suffering from cancers and non-Hodgkin's lymphoma. And so now we're seeking justice. There's a grid published saying this is how long you were there and this is your symptoms and here's your reward. We've got to market and find those people. And we've got to take them through the system to get that award. That means we can lend to an attorney to fund the marketing and fund the costs to bring that claimant across. And then we give more than half to the claimant, meaningful settlements to the claimant. We do that in a lot of different industries. And we look towards doing good as well. Monsanto is the evil agricultural company. And they produce Roundup. They falsified information. They even lobbied the EPA to put false reports out, and all that's been retracted. Now they're getting sued not only for compensatory to compensate those that are dying horrific deaths, the hardest working people in our country, the farmers that were bathing in this, people that were exposed to it. But punitive damage, punishing them, and we can help attorneys work on contingency to help find and support the hourly rates and the court fees to get those meaningful settlements. Same thing with firefighter foam, AFFF firefighter foam. I don't know if you're familiar with these, but our military and civilian firefighters use firefighter foam putting out fires for decades after 3M knew of its harm that it was causing. It was actually causing cancer. And now and now we can help. We can help by representing these individuals so that they can get the justice they deserve. And they can go on and on and on. But the profitability is there. There's $1 million settlements, $500,000 settlements, and these people passing without something to give to their families. It's very expensive to get it across the finish line. So it's got to be a high enough award, and we've got to be able to provide enough of it to the claimant, over half of it to the claimant, while still paying the attorney and giving the investors a return. But that's how it works.
Spilling the tea. That is huge, huge, huge. We have one quick commercial break, and we'll be right back. Don't go anywhere. Stay tuned. Stay with us. We'll be right back.
Are you a local business looking to offer your customers easy access to cash without having to travel miles? We're here to help. At Norman Legacy Investments, we provide free ATMs with free installation that provide a suitable investment for your business. Even better, we offer you some profit sharing and handle everything from start to finish. Just reach out to us today to schedule a free consultation.
We are back on the Gentleman Style Podcast Show, and we have the incredible Mr. Patrick Grimes. He just spilled the tea on how litigation investing works and what you can expect. What's the need that because Warren Buffett said it best, right? You should have an idea. You should have an understanding of what you're investing in. And if you don't know how it works, you shouldn't be investing. And Mr. Patrick so graciously gave us a breakdown and a great breakdown of what litigation investing mean and what it could encompass overall and how it's actually helping and how you're able to make a difference. So that's huge. If you missed that, go back, scroll back, check that out. We are on iHeartRadio, Apple, iTunes, Spotify, Ghana, LinkedIn business page, Facebook, anywhere, Audible, anywhere you get your podcast, we are there. And go back and check out Mr. Grimes and what he just is saying today on Gentleman Style Podcast. One more round of applause. That's huge. That's super huge, sir. You piqued my interest. We heard some really powerful statements from you. What's the risk? What's the bad things, right? Because not all court cases are won. So what are some things people should also consider with the risks and the downsides of this?
Well, that's a great question. I appreciate you asking that question. And if it's okay with you, I'd like to do an analogy to real estate because people seem to understand real estate and how we mitigate risk in real estate and how we do in a similar way with a different asset class, but it's very similar.
Yes, sir. Please.
So we have in our company, we have both acquisitions funds where we're buying commercial real estate right now in cash because it's so discounted. And we have a debt fund where you can invest in a diversified debt portfolio with a lot of loans. Now, if you think about it, somewhat similar to our debt fund where people are reaching out and saying, hey, look, I need some money for this property. And we may lend to that person. Well, how do we manage risk over there? First of all, we want to figure out, is the need there? Well, in real estate, we're housing tenants, right? And in litigation funding, we're providing meaningful settlements to the harmed. So we first have to do the economics to make sure that can those rents pay the bills and produce a profit? Can we then pay this settlement, make sure it's meaningful, and then will it pay for the court costs and the profit? So that's the first step, okay?
Yes, sir.
The second step is, if we lend this money, who are we lending to? So you want to make sure in real estate, they're experienced operators that have past track record and the wherewithal and the capacity to be able to take this business plan of the building or whatever it is, construction, and then execute on it. They have the financial strength, the resources, and the know-how to get it across the finish line. Same with litigation funding. We want to go deep into the litigating partner. Who are they? Who are the partners? What is their track record? Do they have the resources to facilitate the litigation? Do they have the financial capital? Are they participating with us in this? Do they have skin in the game? Just like in real estate, we have down payments and litigation funding. We want to see financial resources, time, and energy invested into this alongside us, right? So it helps to de-risk align interests. What about our security, though? Because in real estate, it's a real asset. You have a real asset. You could put a lien on it. Well, similar to litigation funding. Instead of a lien, we use what's called a UCC1 filing. That allows us to actually put a real lien on corporate assets. Right? These corporate assets are real. The corporate assets are the contingency fee agreements with their claimants. Right? That's the agreement saying if this case is won, then you get paid. Well, we now have a lien on that, and now we can then participate in sharing of those proceeds, right? And so we can do a judiciary foreclosure on, and actually those are actually executable. In fact, those corporate assets are insurable. There are insurance companies will insure a portfolio of existing claimant agreements, contingency fee agreements, just like in real estate, how they'll insure real estate. It's not dissimilar, it's just two different industries. Now, that kind of frames up how you structure these, but it depends on what it is. Like you said, there's a binary risk, even though your downside's kind of protected if you were to get insurance, but there's a binary risk in litigation funding, like win-loss, right? Like, what do you do then? Well, we don't invest in those kinds of cases. There are investments out there in litigation funding where you can get in super early and you can potentially get 100x returns because you're gambling on an uncertain, not sure how it's going to play out, but you can get a huge return. That's very similar to real estate when you're in pre-development, like I was. You're just gambling on, here's something that could maybe possibly, as long as the market doesn't crash along the way, and I can make it double, triple my money. That's amazing. Or in the startup world, if you're an angel investor, you're putting some ships out to sail in these startup companies, hoping they come back to you. More than often they sink, right? Similar to oil and gas investing. If you're wildcatting, you're in super early, out in the middle of nowhere, putting a straw in the ground and hoping, right? But like in all of those industries, as things become more well-known, they get more vetted, the risk goes down. And that's why in litigation funding, we do not do those kinds of early cases. We look for somebody else to take that risk. Typically, it's the law firm. And then later on down the line, once the court proceedings are baked, we're many years down the line, there's even a tort created, a mass tort created, I mean a mass wrong created, where courts actually said, look, this is legitimate. Let's take all these lawsuits and put them together and let's try them. And then they're in trials. And then they've defined, yes, this exposure caused this harm. Causality. Yes, this person is liable for either allowing this to happen or not disclosing the dangers or not righting the wrong when they knew they could. And this has been going on. So causality and liability is there. Now, most of the cases we're in, like Camp Lejeune, they've actually already published a settlement grid, meaning they've already passed a bipartisan law. Republicans and Democrats agree that DOJ is responsible and they're going to have to pay, and it's an endless bucket of fund that is going to pay it, and they can get immediate payment. So it's more of a just getting them through the system on how much they'll get and when, not necessarily if. Similar to the other cases, we're so late in the game. Roundup's being settled for many years now. PFAS, forever chemicals, have been settled for many years now. And there's even a proposed legislation proposed to give firefighters $1 million each right now. So these are very in advanced stages. So to really manage the win-loss risk, right, you want to be very, very late. So it's a matter of how much and when you'll get versus if. And you want to be in a diversified portfolio, just like our loan portfolio, right? We want to be in lots of different late-stage cases. We want to be in different cases that affect different kinds of harm and different companies that are paying them, with strong companies that can pay the settlements. And we want to be in hundreds or thousands of individual lawsuits. So there's not a single point of failure. And for example, class actions, always that single point of failure. With our consolidated mass torts, you don't have that. So through all of that, you diversify your risk and you can come up with a reasonable return, not 20 or 30x returns, but more 20 to 30% internal rate of returns or average annual returns on your money. So it's a more reasonable risk that you can take.
History, thank you. That is huge. History is not an indicator of a future, but it gives people a baseline of where to start. Don't many of us wish we were a part of that McDonald's settlement with that young lady and the coffee situation, right? So I wish I had heard about you back then. 'Cause I would, that was I guess it was unexpected, but it was almost like after that, it started a ripple effect where people now in restaurants having to tighten up their restrictions and how they handle food processing and what they give to customers and clients. So who wouldn't want to have been a part of that? But can you share what was your most noteworthy litigation investment? Because these investments not only sound like they help the firms, but they also create impact, right? You're helping someone or you're helping a company get through that settlement situation. So these are very impactful. It sounds like. What's another one, if you could share, that really kind of pulled on your heartstrings a little bit, I guess.
Well, first of all, we stay away from the frivolous stuff. We say like I burn myself drinking coffee. That's
Yeah.
not our jam. That's not our style. Also, we stay away from the ambulance chaser. In fact, we
Mm,
have a slide in our deck about ESG and impact investing right now. Well, so we want to make sure that we're actually doing good at the same time. In a similar way, in our real estate decks, we say we provide cleaner, safer, and an improved living experience for our residents. Now, that doesn't sacrifice your return. That actually promotes a better return, but you can do so while doing good. So I do draw a line a little bit away from the frivolous stuff, but there's a lot of them out there. A lot of people don't like to talk about them. The sexual assault cases, those are individual cases, not consolidated cases. And those are large scale cover-ups. And essentially, you find those that where they may have been harmed. You don't actually have to prove that they were harmed, but you have to prove that there was an attempt to cover up that harm. And what's interesting about the sexual assault or the human trafficking, sex abuse ones are that they're going after the entire industry. So there are whole hotel chains that once you do discovery, you find out that they were fully aware of what was happening and what their hotels, large hotel chains, what they were being used for. And they enabled and allowed this trafficking to happen under their own roof. And so to really make an impact on those kinds of industries, you have to go after the entire supply chain that enables and supports it. And that's really interesting. There's NEC, contaminated infant formula. Those are not that frequent, but there are heartbreaking cases in which there was unfortunate outcomes with infants. And then there's other ones that you don't really see much on the news. There's the hernia mesh, right? Now, I mean, there was a long standing, and a lot of what's really interesting is that these products are so profitable. The companies a lot of them still haven't changed the products, like Roundup, like the hernia mesh, where it's detaching and causing major problems. And those are so profitable that they're not changing the product. And then to avoid the PR, the companies are quietly settling these. And so if you Google that right now, J&J hernia mesh, you're going to see a bunch of like hush settlements that were made. But
wow.
So there's just a ton of them out there. Hair straightener is another one. I don't know if a lot of your audience is out there using those heavy chemicals to straighten out their hair. But that has been a big problematic mass tort that's caused a lot of damage. There's
You
also
talking
some
about
really,
like perm and those kind of hair care products?
it's the actual additive
Mm,
that you put in your hair, and then you do the straightening process. And most certainly the case. And there are certain demographics which have heavily used them and been disproportionately impacted. Even talcum powder. Talcum powder has been settled twice now, and it's still a part of generational usage in this country, even though it's been proven to cause cervical cancer. So there's just there's a wide variety of these, and it's not a niche. It is a novel investment class, but litigation costs that exceeded that of the airline industry. The cost of litigation exceeded that of the revenue of the global airline industry. So it is, and it is a very large industry, right? And it's very sophisticated industry. It's just not well known on how to access it. And there really isn't a lot of people out there giving access to it to accredited investors. Typically it's institutions. But it is cool how you get to be investing in something that does good, like housing people or energizing people in oil and gas, or providing access to justice. All of these things are required and necessary.
This is huge, right? And so I want to touch on the process. So from beginning to end, I have a lump sum of money. Someone goes to your website, and what does that process look like? What should someone have prepared prior to reaching out to your company? What's the need there?
You don't have to have anything prepared. In fact, I one of the things that I love, because I was able to walk away from high tech, and one of the things that I love is that I get to spend a lot of time working with different investors and just talking about them where they're at. Because like many of them, I was once a hardworking professional, struggling to navigate my way through and on the work until I die path. Now I was enjoying it, and I was traveling the world, and I was backpacking Everest and going around the base camp of Everest and whitewater rafting the Grand Canyon and having a great time. But I found myself on this path where I just never get free of it. And so you don't have to have anything prepared to start that journey, to have those conversations. We have a ton of resources. You can spy on me if you'd like. Passive Investing Mastery. We do every 2 weeks. We meet with different asset classes. We have panels of people from ATM funds, which is, I saw your ATM commercial, people that actually buy those funds and put those ATM in, laundry investments, parking lots, hotels, crypto. Our next one is actually on bourbon barrel and whiskey barrel and the alcohol and bev industry. All these different kinds of investments. It's important to start somewhere. It's important to make active steps to set up calls and engage. And if we're not the right fit for you, we can most certainly get you pointed in the right direction. And I will give you a free copy of my book. I tell my whole story. Some other people tell their story. Phil Collins, lead guitarist of Def Leppard, is in here. Some NFL, NBAs, coaches, players, some real estate guys, entrepreneurs, and I'm in there with hair. And it's persistence, pivots, and game changers. Turning challenges and opportunities. Set up a call. You can go to passiveinvestingmastery.com/book. I will sign this and I will ship it to you. It's passiveinvestingmastery.com/book. I bought a bunch of them. I don't get them for free, but I feel like if it helps inspire people along the same journey I had, then it was worth it.
I want to stick right there. What did you get from this book? What personally did you grab from it that you can share with the audience to see what people can expect to get?
Well, it's interesting because I had been working very hard at my high-tech automation robotics career, and I've always identified as an engineer, and I've been moonlighting single-family real estate and apartment buildings, and I did some oil and gas, and I did all kinds of different things, but I kept it a secret from most of my friends and family. I kept it a secret from my engineering career. The few people I did tell, they didn't quite get it, they didn't understand it. So I had to develop a tribe outside of that world, people that would wander into this new desert with me together. And so I did this all kind of very personal journey. And then I went to a real estate conference and I started telling my story, and they were like, you got to get that out there, because people will resonate with exactly who you were, who you are, and where you're at. And just tell it like it is. Talk about your failures, talk about your ups and downs, your bobbing and weaving. And I go through all of it. I tell all in this. It was the first time that I ever told my whole story. And even when we moved to Hawaii during COVID and woke up in Lanikai and the journey with my wife through that and the ups and downs, and it was the first time I just told it all, and I got it out there as vulnerable. I still hadn't done a podcast yet, and it wasn't until this book was published and made a bestseller that I actually did my first podcast. So it was a personal growth journey for me as well. And now I have a whole platform on educating and giving back. And so this was the beginning.
That's how it happens, y'all. That's how it happens. That's how you change the world, right? It's little by little, baby steps, right? And those big steps, those dips in the pond become big ripples, and it just starts. It just starts with that first step, that initial step. So thank you for putting this book together. And where can my audience, where can we get the copy of the book again? Can you share for us?
Yeah, passiveinvestingmastery.com/book. Make sure you put the name of this podcast in there because we don't send it to randoms. We do ship it for free and everything too, and I sign them. So make sure you put your name and how you heard about us in there, and we'll get one off to you.
Where else can you get this? Where else can you get this kind of quality, y'all? My guests are awesome. This is huge. Sir, you have dropped so many nuggets on this, on your experience, your background, the book, and litigation, financing, and investing. And you said you do ATM fund investing and oil and gas investing as well?
I don't do ATMs. We have done oil and gas. We don't currently do it.
Makes sense. Just curious, just checking in there. So y'all check him out. Connect. This is huge. Sir, you've dropped so many nuggets this episode. What if you could have one more nugget in the hat, right? Because investing is scary, right? It's this money I worked so hard for. I dug in the trenches. I spent the long nights. What would you say to that young boy, that young girl in the audience that they're nervous, but they need to do this because the world is changing. Pensions are going away. I heard rumors of 401ks are going away. Retirement's going away. Social Security's going away eventually, right? The well is going to run dry. If you had one more nugget in the hat for that young boy, young girl out in the audience that really wanted to just jump off, what would you say to them right now?
Well, you had it right when you said it takes one step, one deliberate move each day. And I talk about how taking one passive step a day and one active step a week, meaning download some podcasts. Every morning I go on a run and I have an alarm clock that says comfort and complacency equals same life. And it's a math equation. And that goes off at 6 a.m. And when I look at it every morning, comfort, complacency equals same life. And I've had that on for many, many years. And if I'm not up by 6 a.m., then I just have to face that. And I get up and I go on a run. Even with my boy, my 18-month-old boy, I got the jogger and we go on and run together. And I listen to a podcast. I listen to a TED Talk. I listen to something audiobook that provides inspiration or leadership. And in these particular cases, you can get on investment. You can start educating and learning, but then make one active step to find your tribe a week. That means look for a meetup. There's real estate meetups, there's investing meetups, there's all kinds of meetups, and start meeting the people that are further along in the journey and start letting their mindset rub off on you. Start actively seeking those relationships. And nobody wants to go crawling off into the desert on their own. That's not who we are as humans. We've been trained to band together and go nomad together and find those people, find your people, and you'll be surprised at how you'll band together and you'll make those small passive and active steps into large leaps later on.
I love this. I love what I do. Powerful, sir. That inspired me to keep moving forward. Take action today. Not yesterday, not last week. Today. Take action today. Move the needle forward. Thank you, sir, for being here and giving back in this way. This is huge. This is epic. And we need this. So I want to say this to you publicly. Don't ever quit. Don't ever stop what you're doing. We need what you're doing because that's how we're going to change the world. That's how we're going to change the economy. That's how we're going to change the United States. and do better in the future. So thank you for what you do.
And thanks for having me. It was a great time.
Absolutely. Absolutely. And thank you all, my audience, for tuning into the Gentleman Style Podcast Show. I hope this was helpful. I hope this was inspiring. I'm inspired. And we're going to keep charging for you guys. We're going to keep finding incredible, powerful guests like this to really give back and share the knowledge, right? We're not here to take from you. We're here to encourage you and inspire you and show you and give you the tools. And Mr. Grimes is doing that for us. So like we end every show, tune into the next time, the next episode. We are going to continue to work hard for you guys. Like we end every show. Take care of your friends, take care of your family, and always, take care of business. This is Marcus, your favorite gentleman, and the man, the myth, the legend, Mr. Patrick Grimes, changing the passive investing master. So take care. Love you guys. Bye.